All right, today we are going to look at an individual who is 35 years old. He's interested in a whole life insurance policy to maximize the cash value, and what he would like to do is fund the policy with a maximum of $5,000 per year. So note what we have on the board. We've got fund up to $5,000 per year. Why we have it written like that is because he would like to be able to fund up to $5,000 per year. However, he does not want to be locked into that dollar amount. He doesn't want to be billed for $5,000 every single year. That causes him a lot of stress. So how we're going to set the policy up is where he has a minimum of about $700 per year. And this is the yearly amount he will be billed for. He could even elect to pay that over 12 months if he'd like, and he does not have to pay it forever either. I'll go through exactly that, and you'll see an example of that too. So how we would set up a whole life insurance policy for someone that wants exactly this is like this. So we've got the minimum premium here. This is his minimum commitment, $700 per year. The premium piece does not build any cash value in the first year. The reason why is because it purchases us a death benefit up front. How the insurance company views the insurance premium with this policy is that they're going to overcharge us for the cost of insurance up front. And then beginning the second year, third year, and onward, we'll see our premium payments come back to cash value for us. PUA dollars. PUA stands for Paid Up Additions Rider. I like to refer to this as a cash dump-in. These dollars show up in cash value in the first year and all years after that too. Now, when I say shows up in cash value in the first year, typically you'll see anywhere between 90 and 95% of that PUA payment show up in cash value immediately. It will enhance your death benefit long-term. It buys you some upfront, but it is a very small amount when we compare it to the amount of death benefit we get from premium dollars. An important side note here, PUA dollars are not required. So with this particular policy we're looking at, we're going to look at a policy with Guardian. He's only billed for $700 per year. It's about $705 when you see the exact number. And he can add additional PUAs at his discretion by logging onto his online portal, mobile app, and he can just throw money into PUAs whenever he'd like. But he's not required to add the additional funds. We're going to look at different examples of this too. So the total funding amount here, if we add these two, is $5,000 per year. That's the maximum he ever wants to be able to pay into the policy. You'll notice the total death benefit is about $125K. And where we came up with that is because it gives him a MEC limit of about $5,000, a little bit more than that. MEC stands for Modified Endowment Contract. That a MEC limit is the maximum dollar amount we can pay into the policy every year without triggering a MEC, which would be a taxable event. He's interested in a whole life insurance policy for the cash value. What are the core benefits of the cash value? Or why are people interested in it? Because it is a safe place we can position money that we can access like a personal line of credit and has a really nice tax advantage. It's tax-free unless we trigger a MEC. We don't want to trigger that or any taxable event. Here's what we're going to look at. What does my policy look like? Pretend you're him for the rest of this video. If A, I only pay the minimum every year. B, I add extra money when I can. This will be just in random deposits. And then C, I aggressively fund the policy until I am 40 years old. Let's begin with just the minimum, shall we? So what we've got here, two columns on the left, yearly minimum, PUA rider. Here, he's paying only the minimum forever. Nothing extra is going into PUAs. First year cash value, just over $200. If we look at year 16, when he's 50 years old, he still has less in cash value than his total payments over time. Not attractive, is it? No. You'll see that he gets his money back by year 19. Taking out a whole life insurance policy or starting a whole life insurance policy where I pay the minimum only is typically the least efficient way to build cash value over time. However, this demonstrates what his policy looks like when it's set up to be able to fund $5,000 per year, but he only wants to be billed for this. So what does it look like if you only pay the amount that you're billed for every year and nothing extra? That's where it would not look that good. However, what does it look like if you add some more money? So here we've got some random funding. He's starting out with a lump sum. So there's the minimum. There's an additional PUA payment. Where we came up with those numbers, it's because it gives him a net of $5,000 right out of the gates. Okay, total funding, we can tally the total amount he's paid over time. When does he get his money back? Between years 5 and 6. He's just about there, year 5. And year 6, he's just positive when we look at it. But that's when he gets all of his money back. And now he's got a gain too as time passes, meaning more in cash value than what he's paid into the policy. And I like this example a lot because it demonstrates the flexibility of a policy. Look at the different dollar amounts varying as time passes. You'll see just $1,000 until he's 64 when we look at the remaining years. But this is meant to demonstrate the flexibility. One more, shall we? Here's the aggressive option. So here he's getting a total of $30,000 into the policy, wanted to stop once he's 40, fund through the age of 40, so he is funding it then too. $30,000 total, there's his cash value. When did he actually get his money back? Year 4. He had paid in $20,000 and he had a little bit more than $20,000. Then he never pays another penny in, not the minimum premium or anything. Look at that cash value continue to appreciate over time. Then we can look at it long term as well, all of them side by side. And anytime we look at these illustrations, we always have the detailed reports from the insurance company as well. We did cover that in another video, which covers this exact same individual, but it's a much more detailed overview, and you can check that out here. I hope you enjoyed this video. Please let us know your thoughts, and as always, I hope this helps. Thanks so much.